Hi everyone, and welcome to the weekly Forex Outlook for DTS system traders. And it's me, Omar, and I'm going to try to guide you along so we can find some good trades. Last week, as I said in the weekend review, was a stellar week, and I'm hoping to continue. So far, from everything I've scouted, it does seem like there's some great possibilities out there. So let's get started right away. Right away on the euro, we know 3400 1.34 is a very important area, and price is currently sitting right there. Remember, it closed below 1.34 last week, and then it came right back to that line. So essentially, we have two good trades. If you think that we are now in a downtrend, which I don't. I still think we're uptrending, but we've had a pullback. Although the pullback to 1.34 and the close below does indicate that maybe there's a trend reversal, so it's kind of up to you. But either way, there are two potential trades in the next day or so. One is a short off of 3400 with a DTS signal. The other is a long off of 3400 with a DTS long signal. Now, if you want to be extra conservative with this system, you can wait, and I'll pull up the chart. All right, there we go. What we have is that same line. You can see 1.34 is right here, and so we would be looking on the Falcon, for example, for a buy signal that's above this line, or a sell signal that's below. For if you wanted to be extra conservative, you could wait for a breakout in one direction or another, followed by a pullback, and then the short or long signal in the direction of the original break. So if we get a nice move up first, and this is if you want to be conservative and make sure the pair is moving in that direction, and you wait for it to come back to the proximity of 1.34 and then take it in the original direction. Now, me personally, I'm just going to wait for the market to get moving and for a good solid signal to form in either direction. I prefer a long because I still think it's in an uptrend, but the way it's kind of fallen like a stone over the last few sessions, it could be into a downtrend. So that's pretty much it for the euro at the moment. I guess let's go back to the daily chart so we can see what happens if it goes in either direction by a bit. Okay, so here's the daily chart again. Our next major area of support and resistance is 1.33, and that does only give us about 100 pips before getting to the next support. So there's a little bit of a limited downside, but to the upside, we have to go all the way back up to 1.36, which is 200 pips away, and then 1.3670 area is also very important, and that's a major area as well. So you got quite a ways to go up there. Again, that's why I would prefer a good long trade that had some secondary, extension on it. And that's pretty much it for the euro. It's pretty cut and dry, straightforward. So I think trades are going to be good on this pair this week. All right, and here is the pound versus the US dollar on the daily chart. Now, while the euro has made some nice moves up and it's with some good consistency, the pound has made its way down, which, as of course, if you've been following along with me, you know that bothers me. I like when they both move in the same direction and have a very high level of correlation. We can see here that after 1.5820 was broken, it was retested with a bad slice through, which is obviously not what you want because that's very hard to trade, and I'll show you what I'm talking about. I'm talking about this here. We had the initial break and close on the daily was followed by a perfectly textbook pullback, which then went down again. After we hit the bottom of the support, it went back up and then sliced through, but immediately reversed, and then broke below 1.5820. So, in my opinion, this is still a trade you would want to take short, but at the same time, we are now coming into this lower area of support, which would make it very difficult to trade a short. Now, what I would want to do is one of two things, and that's going to be to take a counter trend long off of this area, which is at, I believe, 56.30. Or the second alternative is that we wait for a breakout downwards, and then we get a pullback followed by a short DTS signal on any of the three systems. And that would be my desired trades. If the pound does make it up to the top here, we'll be looking to short at 58.20 for a nice DTS short signal there. Or if it doesn't make it up as high as 58.20, we can always take a nice short signal that bounces off 1.5800. The pound in recent weeks I have pretty much avoided. I'm not sure that I'm ready to dive back in again. We've found some awesome success on the EURUSD and the Euro Yen. Even though I did successfully trade the pound yen last week and did pretty well. So I'm going to try it again this week, and if I have another successful week, we'll start incorporating it into our weekly analysis review and our live trading session. So this again is pretty straightforward. The only issue, like I said, another cause for concern is the bit of the sideways action we've been getting lately. We had a nice down move here, even though the normally correlated pairs with moved up. So we might be waiting for a breakout. This is still a pretty large range, so I think it's over almost 200 pips. And let's go ahead and check out the Aussie now. Alright, and here's the Australian dollar versus the US dollar. Now, normally this is a pair I absolutely love trading, but we've had a bit of an issue with it lately. I've traded the Aussie yen, but I've kind of avoided this because we just haven't been getting very much of a daily range on it. So when I don't get the movement, I don't like to trade because it doesn't give me the best opportunity to make bigger wins. So as we discussed in the past, we had our 1.0330 area, which is the blue line here, and we were saying that we wanted either trades if we got pullbacks, because we were in the range between 1.0600 and this area here for quite some time, and we were waiting for a nice bounce off of this to hopefully go back to the top of the range. Instead, we got a breakout here, followed by actually a more proper breakout here. Then we got our standard pullback, which went a bit far, and this is why you don't want to take forward orders, and this is how DTS helps you avoid losing trades, because if you were just waiting for the pullback, you would be putting your short order in here, and then you'd probably place your stop just a bit above the last candle. If you're very, very conservative, you'd have a huge stop up here. But for most traders, to keep a decent lot size, that's where your stop loss would be, and then the next candle would have taken you out, and then price would have plummeted right back down and made you very angry at the trade. Or at least that's probably what would have happened to me. Now with DTS, we don't have to worry about that because we're not just taking blind orders at levels. Even though support and resistance is a very, very good way to trade, and it's a very, very good guide in Forex, it's nice to have the advantage of something that also gives you momentum and directional information for what the market's doing. So you could probably get a nice trade after it pulled back. You would see the bounce again away from this area, and you could take a short trade, and you would be confident with the trade because you knew this was a major support and resistance. So the two go hand in hand. So now what do we do next? Well, we can always wait for another pullback to the area followed by a short trade. It may do that since we're in a bit of a sideways pattern. We could wait for it to break through this area and wait for it then to pull back and take a long trade. Or we can figure out where it might fall to down here. And how do we do that? Same way we created these lines. We go back in time. We don't have to go back extremely far. We can see on the higher the time frame, the better this is, this technique. But we always want to look and see where price made a move and then got to a spot and then couldn't go any further and had to go in the other direction. And the bigger move followed by the bigger swing, the more important the area. So right away, we're gonna see that there's gonna be a major support and resistance here, right? And there's also one here. Now, what I find is that in general, these two should be linked because they're around the same area. So, and this is, again, this is not an exact science, but we try to do our best. So we're going to take a horizontal line, and we're going to place it. And then we're going to see how many times we can get it to touch. And we like exact touches or multiple touches. And it's okay for it to be pierced through, as long as the body stays above the support and resistance. So this looks like a pretty good area. Let's check out what number it is. Okay, so it's 10166, and we can probably say, I always try to round. That's probably not good. Maybe 170. And we just try to see how it looks. Okay, that's better. Not exact touch on anywhere. Can we go back further? You can see that it's been important in the past. Also, here.
Trend.
Here. Now we did get a breakout followed by a quick reversal, but that's okay too. It still shows the importance. And again, the general area was important here. So with that information in mind, we can either leave it where it is,
Scalp.
or we can move it up and down, or we can move it up and down a little bit. If you like that better, or maybe down here, you know, whatever lines up the best. Now, in my opinion, I think 1.070 touches the most times and gives us the best view. So we're just going to call this 3, all charts, and we'll just make sure that it is at the level we want it. So, all right, and that's how we find our next major support and resistance. And of course, you can go back as far as you like, and the bigger areas of swings, the better the support and resistance will end up being. Now, if you want to look for minor support and resistance, you just go down to smaller time frames, and it works exactly the same way. But so in general, now we have this new band, which goes from 1.0330 down to 1.0170. And this will give you an area to trade. And also, if you get the short signal, it'll give you a good profit target somewhere in this area. If price plummets, it will give you a good area to look for a bounce trade off of, or a new fresh setup as it breaks below. And then every time it breaks below, you have to go back, maybe even on the weekly or the monthly charts, and see what the next major area of support and resistance is. And like I said, if you really want to do it up, you should try to look at as much data as possible. I've found that as long as you stay relevant within the last year or two, it's usually a good enough area to work with. Alright, here is the euro versus the yen on the daily chart. And this, my friends, has been the big kahuna for me over the last few weeks. We're getting fantastic daily ranges on it. We're getting some very nice movement. And as you can see from the chart, it's almost gone straight up. We have hit some areas where we had a little sideways action here. We had a little sideways action over the last few days here. But there were still trades to be had. They weren't quite as easy as just putting in a buy order somewhere and just watching it run. But at the same time, that's why you have to learn proper trade management, or just use the trade manager, which makes it a whole lot easier. Okay, so as I showed in the weekend review, we had a bit of an issue because, oh yes, 126 was breached, and we had a pullback, but then it just broke right through. So we would naturally think that this area we're now going short, but as is common in Forex, we had a reversal, and now we're back above 126. So I'm still bullish on this pair. It is fine to understand that, you know, a lot of times pairs can't go in one direction forever, but don't ever try to guess when that's going to stop. We let the market guide us, and then we take trades in with what the market tells us. So had price stayed under 126, then I'd still be looking for shorts. But now that price is above 126, I prefer long trades. But that doesn't mean that's the only kind of trade I'll take, but the market's going to have to guide us. So if we have a breakout of 126 to the downside, we'll be looking for a pullback and then a short. If we continue with this upside breakout, then all we need is a good market movement, maybe a pullback to 126 area, followed by a long signal. I'll be all over that trade.
Swing.
And that's pretty much it on the Euro Yen. It's been a rather easy pair to trade. It's been getting us great daily ranges, and we have been getting our first profit pretty quickly after the London session starts. And let's go ahead and take a peek at the Aussie Yen. Alright, here is the Australian dollar versus the Japanese yen. Now, what you should immediately notice versus all the other pairs we've looked at is how clean and respectful this pair has been to support and resistance. I mean, it's perfect. We had our breakout here. It continued to rise, but we don't chase after it. Because remember, there were plenty of traders who tried to put their buy orders in here thinking, oh, it's just going to continue to run up. And then immediately they were stopped out. So that's not the way we trade, because we want to consistently win. We now have a nice pullback to that massive area of 95. And then look what immediately happened. We moved back up. So essentially all I need to trade this area is wait for a bit of a pullback and then a long signal. Very aggressive traders can always just wait for there to be some great movement in the market and then wait for a good buy signal. But me, I like I guess the setup to be against the way I want to trade, followed by a big move away from an area of support and resistance. So I'll definitely be looking long on this pair. It's looking pretty good, but you know, we can't predict what the market's going to do, so we always have to have the other contingency plan as well. Let's say price has attempted to stay above 95, but for some reason it stalls, and now it's going to barrel straight through this area. So what we're going to do is just wait for it to come back to it, and then instead of just jumping on a sell trade as it comes into 95, we're going to wait for it to move away and give us a sell signal on DTS. And doing that will give you a much higher probability of making good trades. I had an 87% win rate last week, and that's because I just used these fundamental rules along with the wonderful signals DTS produces, and that's as easy as pie to trade. Now, I never historically have had a ton of success with the Aussie yen, but lately it has. Using DTS, I'm finding that it's much easier to trade. It does give you awesome results when it moves big. Some of my biggest trades have been on the Aussie yen, Euro yen, and pound yen in my life. My biggest one ever being on the Euro yen. So anyway, I really hope that we have a very, very good week this week. That Forex market keeps moving the way it has. We've been having excellent daily ranges. And of course, if you need to contact me for any reason, please do so at omar@dtsforexsystem.com. If there's any aspect of trading you want to discuss, whether it's DTS or not, I have lots of experience with different systems. So by all means, share your thoughts. And of course, I'm here for you to make this something that you want to do and be successful at. So if you have any ideas of improvements or something else that you want to see that I'm not covering, by all means let me know so I can get on that. Anyway, I look forward to seeing everybody in the live trading session, which is going to start at 1 hour before London Open, here coming in just a few hours. So let's get ready and make some pips. Have a good week, y'all.